trillions will flow into blockchains like Stellar XLM. This is part 2 of the Stellar XLM ISO20022 gold standard. We need to follow this up from the previous video and just figure out what is going on. How can we determine what's happening in the markets from understanding the history of the gold standard, the Bretton Woods, and what's it got to do with what's happening currently in the markets that we are in now, in our state of markets that we are in now. The Dow Jones. Nathan, over to the charts. Okay, so let's think about what's happening at the moment in the markets, right? It seems that the Federal Reserve are buying up bonds. In fact, countries from all over the world are buying up their own bonds, their treasury bonds, right? Like, for example, the EU is buying up European Central Bank bonds. Yeah, they made the statement, we have unlimited bond buying power and we will be using it. And it's likely that the Federal Reserve are going to follow suit, yeah, to an extent. All right, so we're going to get this massive amounts of inflation. We're already in this sort of stagflation situation, right? So that's normally what happens when you get a top. And what we need to do is think about back in the 1920s, what happened? What actually happened? We were on the gold standard, right? I wasn't alive, but you guys that were old enough were on the gold standard, yeah? And as soon as that kicked in, stocks plummeted. Okay? So that was giving the dollar the value of gold. Therefore, it's empowered the dollar. Stocks don't seem that lucrative anymore. Boom, massive sell-off in the market. No need for that. It's increased the value of the dollar around the world because it's backed by gold. So people are more than likely to want to have and to hold and to store these dollars, right? Well, let's think about the Fed buying up bonds to effectively prop up the market, right? Well, when you look at this drop from the 1920s, we're looking at 80-90%. So we're talking minus 89.11%, right? Now, when we think about that and we think about why this stock crash happened, is because the dollar was given more power, more value, right? Well, what happens if the dollar now is given more power, more value, which it currently is, yeah? And that is the fact that bonds are selling off. It creates a higher yield price. And with a higher yield price, it becomes even more competitive as to stocks themselves. If you're getting like 3-4% to hold a yield for 10 years, that's a great lock-in. When you've got, companies on the Dow Jones that are offering around 4% return, 5 on average, yeah, and we know they're riskier because things could, they're not the government, they're just, they don't have the power to print their own money, right? They have to perform, yeah? Have to be innovative, come up with fresh, new, innovative ideas, or have something that everybody needs and wants, right? So if the Fed is not buying up bonds anymore because the printing of money is devaluing the dollar too much, so their purchasing power abroad is out of whack, okay, then what are we going to get? We're going to get a dollar that's too low in value, right? So they're not going to do that. They're going to carry on printing. Yeah, they're going to follow suit with the ECB, and they're going to print more dollars and buy up the bonds, right? Which pushes the premiums lower, which stabilizes the dollar price. Okay, which in turn, if this dollar price is stabilized, then the reverse should happen and stocks do not crash as they did in the 1920s when it was under the gold standard. But let's just say the reverse did, and the Federal Reserve couldn't stop the selling of the bonds, and the dollar just kept going higher and higher and higher in value. People couldn't afford anything in the US. Inflation was sky high. No one can afford anything. No one can service their debts anymore. Well, then we'll have an implosion in the debt market, a complete implosion where everything sells off, right? And we're looking at then probably a depression and a 90% drop. So with our Fibonacci, we come up to this zone here, right? So let's just say we reach this zone through this period. It may take several years before we get to this zone. Let's just assume that we did that and we had this 90% drop. That would take us way below the 2008 stock market crash. And you know, that's quite a possibility. In fact, it's probably going to happen if we're in a bubble. This market is parabolic. It may have some way to go yet, but when it pops, we're probably looking at this 92% drop, and then potentially we're looking at a new financial system, whether it's the BRICS, whether it's, you know, Fed ISO20022 interoperability, whether that will help resolve the problem, and then we'll get this immediate rise back up, or a period of consolidation and back up to the levels, is another story. We don't know. It's unforetold. It's unseen, shall I say, to us. We don't know what the design is. We know what the design is, but we don't know what the outcome of the design will be. Yeah. But in any case, this is what could be happening. Gold could be telling us how this change in monetary standard, yeah, is going to affect the stock market and in turn affect cryptos. We could be moving to a new crypto monetary standard. In fact, it's highly likely that we're moving to this new crypto monetary standard because of the integration, the regulations from country to country to country is there. The rails are being built, and it's inevitable, isn't it, when you think about it? This is what's happening. We're at this point in time where we're popping. We pop 90% down below the housing bubble prices. That is low. Entering a new depression. Trade sideways for some time before we come out of the depression with a new financial system. This, I believe, is likely to happen. Okay, that's great, Nathan. Thanks again. So you can see, just by looking at the charts, like you can see visually what's happening, right? It's laid out before you. You know, I don't know if the gold standard was the cause of the depression. Not likely. More than likely to be monetary policy. I mean, that's why Bitcoin's come about in the first place, right? And cryptocurrencies. So yes, I think with the new financial system, that's where we're heading, and trillions will flow into cryptos like Stellar XLM. We're going to enter this quadrillion-dollar market, and we're going to make heaps of money. In any case, I'm Nathan, aka Nathan of Zion. Smash the Zion coin up there. Check out the next video, part 3 on Stellar XLM, the gold standard, ISO2002222. See you in the next one. Have a great day now.